Hello and welcome. We all know that we have to pay income tax once we cross certain exemption limit. Most of us would be well aware of the word TDS on our payslips. Once we pay income tax, it is obvious that we furnish our income tax return and we all do that. But did you know that there are certain situations in which you absolutely are not required to furnish your income tax return? In this video, let's discuss one such situation. But before that, if you haven't already, do consider to subscribe to my channel for more videos. So, today's topic, as you have already seen it from the title, is one such relaxation for specified senior citizens. In this video, we'll understand what do I mean by the word specified, what exactly is this relaxation and who can get this benefit, are there any conditions to satisfy, and some tax planning tips in the end. You can get this relaxation whether or not you have opted for alternative tax regime. So, let's get started. Specified senior citizens here are resident senior citizens of age 75 years or more. So, if you are a resident senior citizen of age 75 years or more and if you have only pension and interest income, this pension and interest income should have been credited to the account in the same bank. And you as a pensioner are required to furnish relevant documents to the bank. To understand this better, let's say you are a retired central or state government employee, you are 76 years old and you get pension from your employer. This pension is credited to your bank account, say in State Bank of India. You also have certain fixed deposits in SBI and you earn interest on such FDs. If you furnish certain relevant documents to SBI, then you will not be required to file your income tax return. Now let us understand what documents are required to be furnished to your bank. First, Form 12BBA. To get this form, you may either approach your bank or you can download it online. I'll leave the link in the description. We'll shortly see the format of this Form 12BBA. Then proof of your savings or investments, if any, to avail deduction under section 80C, 80D, etc. If you pay insurance premium, then receipts in respect of such premium payments. If you have a PPF account, then receipts in respect of payments that you make to your PPF account. Or if you have account under senior citizen savings scheme, then receipts in respect of such payments. If you have tax saving fixed deposits, then fixed deposit receipts. If you have health insurance, then your health insurance policy and so on. Now let us see the format of the Form 12BBA. Form 12BBA is a declaration that is to be furnished by you to your bank. In the field name and address of the person, fill up your name and address, then fill up your PAN or Aadhaar number. Previous year is the financial year for which you intend to furnish the declaration. Fill up your date of birth, then name of the bank in which your pension is credited. Specify the name of your employer and your PPO number. In the verification section, enter your name to certify that you have no other income other than pension and interest income. Fill up the date and place, write your full name and sign the form. Once you furnish all these documents to your bank would compute the total income and income tax payable by you. Tax payable would be deducted from your bank and paid by the bank to the government. In support of this, the bank would issue you a TDS certificate, that is Form 16. This TDS transaction would appear in your tax credit statement, that is Annual Information Statement. If you would like to know how to view or download AIS, you may consider to watch my earlier video, the link in the top right corner. This relaxation from furnishing your income tax return would not be available under certain circumstances. Let's see what are those. First, if you are a senior citizen but if your age is less than 75 years. Then, if you are a non-resident Indian, even though your age is 75 years or more. Third would be if you have any other income, say rental income for renting out your house or any commercial property. If you run a business, you would have business income. If you invest in stock market, then you would have dividend income. Or if you have interest income from any other bank, that is the bank other than the bank in which you receive your pension. Fourth would be if you don't furnish Form 12 BBA and proof of savings to your bank. If you fall in any of these categories, then you will not be able to get this relaxation. In other words, you will be required to file income tax return if you fall in any of these categories. Now the last part of the video, that is tax planning. Let's see how can you plan better so that you don't end up foregoing this relaxation. Consolidate all your FDs into one bank account. I know it is easier said than done because it has got its own pros and cons. It is not wise to have all your investments in one basket. Also, different banks offer different rates of interest. At the same time, if you want to have this relaxation, then you cannot have FDs in different bank accounts. So, how can you make a decision? If you have FDs in a reputed or nationalized bank, then the risk would be limited. So, you can do a cost-benefit analysis. If having FDs in multiple bank accounts would still be beneficial to you, then you may consider to ignore this relaxation and file your income tax return. Otherwise, to take advantage, you may consolidate all your FDs into one bank account. Second, ensure to furnish Form 12 BBA and proof of your savings etc. within the time limit so that you don't miss the deadline. Then periodically check your tax credit statement, that is annual information statement, to see that the tax that has been deducted from you is deposited into the government account. That's all I have for you in this video. Hope this was helpful. If you enjoyed this episode, you may like and share the video. Thank you for watching.